most trustless name in news.
What is Bitcoin going to do? That's a question on everyone's mind as the price struggles to keep its head above water. Well, to answer this question, we need to dive into the world of Bitcoin mining, as this industry is critical to Bitcoin and where the price is headed, especially in the future. So remember, friends, everything seems the darkest before the light. So light one up with me, because it's time for Chico Crypto. Everyone knows the Bitcoin halving just took place, but if you didn't know, Bitcoin miners have had one of their main sources of income cut right in half, the Bitcoin block reward. And that's definitely hurt their bottom line as the cost to mine Bitcoin increased significantly. Bitcoin miners were earning 6.25 Bitcoin for winning a block in the beginning of the year before the halving. This equates to nearly $390,000 with current prices. Well, after the halving, they get just 3.125 Bitcoin per one block. So that reward is now just 195,000. So are miners going to be able to survive with that significant of a drop? Well, many people believe that post-halving, Bitcoin transaction fees were going to be the savior for mining. Ordinals and the halving launched runes were going to provide fees to the miners that would offset this drop in revenue. For example, one of the largest crypto media outlets said, runes are offering a significant lifeline for Bitcoin miners with the subheading, the transaction fees are the wild card for Bitcoin miners, with the current increase representing a crucial revenue boost for BTC miners. Did this happen? Did runes save the day? Well, blockchain.com has a miner revenue chart that includes revenues from mining blocks and transaction fees. And here we can see before the halving and the transaction fee boost from runes, the average total miner revenue per day was about 65 million. On the day of the halving, April 19th, there was a big boost because of transaction fees. This surged miner revenue all the way to nearly $110 million. But as we can see in the days after the halving, miner revenue has been sinking. And as of now, it's just above 31 million. So what does this mean? Well, remember, miner revenue pre-halving was about 65 million. Post-halving and post-runes hype, for the past few days, miner revenue has been averaging 32 million. 32 million is about half of 65 million. Runes transaction fees are not helping. Miner revenue has officially been cut in half. The halving has halved. So miners can't rely on the transaction fees like what many people hyped. They're going to have to rely on the main source of income, mining Bitcoin. Are miners going to be able to survive this with just Bitcoin block rewards? Well, to answer this question, we need to see what the mining landscape consists of. What types of miners are being majority used? And are they profitable with the electricity costs? Now, there is an average cost to mine a Bitcoin across the world from macromicro.com. And when you look at this, things look a tad bit scary. From their data, we can see the average cost to mine a Bitcoin is over $105,000. So with a Bitcoin price of just above 62K, miners on average are losing $43,000 for just mining a BTC. Yikes, if this was true, we would be seeing a massive miner capitulation, as the less efficient miners would be forced off the network because the Bitcoins they earn are not worth the cost to mine. But this is not happening. As we can see from the Bitcoin hash rate, the total mining power of the Bitcoin network, there was a little dip post-halving, but since the hash rate has been on average climbing, meaning those supposed unprofitable miners are sticking around and some miners are coming back online. So what is up with that data from Macro Micro? Well, if we go back to it, we can see that they took their data from Cambridge University. Switching to Cambridge University, and the last time they did a global Bitcoin mining analysis, it was done in December of 2021, aka this is super old data they are using. So what is the average cost to mine a Bitcoin? Well, let's dive in right now and figure that out. Here is some data on the Bitcoin mining hardware landscape. And as we can see, the line of S19s make up about 80% of Bitcoin mining across the globe. The S19 XP makes up 17%, the S19J Pro makes up 40%, and the original S19 makes up 23%. So are these Bitcoin machines profitable? Well, going to asicminervalue.com and looking at the lines of S19s, we can see that not a single one is profitable as of right now with the current Bitcoin price. But if we scroll up, that is because it defaults to an average kilowatt hour of 12 cents. Retail miners pay 12 cents. The big miners do not pay that amount per kilowatt hour. For example, this tweet from Andrew Tesler on X shows how much the American mining conglomerate Riot is paying per kilowatt hour. Andrew says, according to SEC filings, Riot Blockchain Inc. has a long-term contract to 2030 to buy energy from TXU at 2.5 cents per kWh. Yep, the big miners are not paying those massive prices. They are paying on that low even in America as they set up their operations in low-cost states like Texas, make agreements with the power companies and grid operators. So now let's just put 2.5 cents into ASIC miner value to see the profitability. Looky. All those unprofitable miners have now become profitable. But how profitable are miners like Riot? Well, luckily CoinShares put out a mining report just before the halving, and we can see how much it costs the top American miners to mine 1 Bitcoin post-halving. As we can see from this chart, it was costing Riot about $66,000 to mine a BTC, but they were on the high end of things. Of the miners surveyed, 12 of them were lower than Riot. Bitdeer was even as low as 41K. From their report, CoinShares said, recently we updated our data primarily based on the Q4 2023 reported figures. We have found that the average production cost per Bitcoin among listed mining companies is now approximately $53,000. So right now, a large majority of the miners are still profitable. They're making money and we aren't even close to a miner capitulation, aka a massive dip. But the markets want us to believe a capitulation is coming and the price is going to collapse. The market manipulators have done this over and over this bull run. They do it by dropping the price near to the cost of production for 1 Bitcoin. As we can see, since the market bottom in late 2022, the price pumps for a bit and then it dips down to the upper range of the cost of production. This happened 3 times in 2023, and then once in the beginning of 2024, it got pretty close to the cost of production. Now, I'm not saying Bitcoin is going to dip down and crash to 53K, the current cost of production post-halving, but this dip we are experiencing shouldn't be something that shocks anyone. And if it goes down lower to the high 50Ks, like 58K, that is nothing to be worried about. It's actually likely. And once we get past this dip, things are going to start looking very nice for the market. Let's just look at the past dips down to the cost of production from last year, 2023, and how much the price rallied by after. The first one was in March of 23, when the price of Bitcoin hit 20K, the cost of production. By the next month in April, it was up to 30K, a gain of 50% in a month. The next one came a couple months later in 2023. The price dipped down to 25K, the cost of production. It bounced off of this and hit 31K the next month in July, a 24% increase. Finally, the last one came in September of 23, and the price was 25K once again. Well, by the next month, it hit 34K, a 35% increase in a month. Thus, the average pump 1 month after a dip to the cost of production throughout 2023 was 36%. So let's just say Bitcoin drops down to 58K, close to the cost of production, sometime in early May. By early June, 1 month later, it theoretically could pump by 36%. Guess where that puts the Bitcoin price? At around $79,000 late May, early June. I wouldn't doubt that this happens for a second. Cheers, viewers. I'll see you next time.
The most trustless name in news.